Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 27th of March and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 15, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big industry stories across the franchised and independent sectors for you to enjoy all in one place on your podcast feed.
I mean, we've got just a plethora of headlines this week, haven't we? I mean, we've had to be, again, very, very selective. But we've got some cracking headlines this week, haven't we? But ahead of, obviously, the showrooms reopening in England and Scotland as well.
Yes, we're just over a week away from Scotland reopening and nearly a fortnight before England, and hopefully the rest of the UK reopens. And of course, this weekend, the clocks change.
Yep.
Spring will start from Sunday, and also spare a thought for customers and businesses with cars and parts stuck in the Suez Canal.
Yeah, that's serious to grab the headlines this week, isn't it? A serious problem. It's created some good social images for people and gifts and stuff, but no, it's I didn't think that would happen, would you?
No, and it is a big issue because obviously cars and parts being transported from China, Japan and South Korea, that they will be affected.
I hope all my birthday presents aren't on there.
Ah, well, that could be an issue because I understand you've got a big birthday this weekend, haven't you?
Yeah, it's the 50th tomorrow. So yeah, I've reached that. I'm a double lockdown birthday boy. So I was right at the start, doing the celebrations and the pre 50th, and then this year we were going to do a big thing for my 50th, but we won't be doing very much. But no, thank you.
No, I can imagine 12 months ago you were thinking, well, okay, being locked down for my 49th, but I'm going to have a big party next year.
Yeah, we'll make up for it next year on my 50th. Yeah, no, it didn't happen. So anyway, not much different has changed.
Happy birthday for Sunday.
Oh, thank you. So, I mean, cracking interview this week with Steve Young, who's leading the industry consultants at ICDP, and I mean, covering sort of things like the agency model, future of company cars. We touched on EV and the online EV propositions and things like that. But I mean, that's had some cracking feedback this week. That interview with Steve, hasn't it?
Yeah, it was a really good interview. Steve had plenty to say, and we've already said we want him back on the show because we covered a lot of ground, but there's plenty more to talk about. So that should be on your podcast feed. So do head over to that. And this week we're actually joined by CAP HBI Head of Valuations Derren Martin. So he'll be giving us a sneak preview of March's used price trends. So stay tuned for that.
Yeah, and that's ahead of them being available on Monday. So yes. He's given us a preview of what to expect and what to look for, and some good advice as well. He did share some views on what's happening with some of the sectors, and we are out of seasonality and what to start considering as we come out of lockdown.
And if you've got any stories for us on Motor Trade Radio, or if you'd like to come on the show or have any questions or suggestions, then you can email us both at motortraderadio@yahoo.com.
We have got a number of headlines this week, and you spent a little bit of time on making sure that they sort of segue into each other as well. So we've got some very interesting ones.
Yeah, all very thematic this week. So headlines are: the SMMT calls for incentives to drive EV sales for private buyers. Motorpoint introduces a scrappage scheme for Birmingham's clean air zone. Bumper reports that car owners continue to delay service and repair work due to coronavirus. The number of UK cars missing MOTs by more than 3 weeks triples. Looking at some of the PLCs, we've got Cambria Automobiles CEO leads MBO bid for the dealer group. And Pendragon, strong second half cost cutting drive leads to profits. And also, we've got an automotive icon retiring after 29 years of service. And it's not you, is it, Phil?
It's not yet. No, not quite there yet. But we'll see how my 50th goes first, eh?
Yes.
So heading over to Motor Trader first on the SMMT, and SMMT have been very, very vocal on the EV over recent months. As sort of lots happening in that space, and I think we talk about it on a regular basis. But the headline is that SMMT calls for incentives to EV sales for private buyers, and this takes an interesting spin now because, you know, EV has been very much focused on the business sector, on those fleets, but actually now there's a lot more talk around the private market and used market. So the conversations are heating up now on EVs.
They are, yeah. And you know what? Mike Hawes talked about the transition to EVs when we had him on the show a couple of weeks ago. But this was before the announcement of the changes to the plug-in grant. So they've been doing some number crunching over at the SMMT, and new analysis shows that just 4.6% of car registrations by private buyers in 2020 were for battery electric vehicles, and that compares to 8.7% for fleets and businesses. So we're looking at total figures of, well, just over 34,000 registrations for private buyers compared to 74,000 for corporate registrations. So there is an imbalance there. And what the SMMT is saying is that, okay, the electric charge, excuse the pun, I apologise for that, but it's being led by corporates, it's being led by fleets. So if you want consumers, private customers to engage and join that journey, they need to be incentivised, and removing the grant to some customers is not going to help them.
Yeah, and it was. I mean, at the time of the announcement of the grant, the timing of it, and the fact that it was actioned immediately, he did become pretty vocal on that and put the warnings to the sector in terms of what the impact could be in terms of overall volumes, and did some forecasting on where the market could head if the government don't get behind the initiatives and incentives to make this happen. But again, getting into that private market is key to this. And he's he is fairly focused on that at the minute. So I think this will continue, won't it, now going forward?
It will, and the main thrust of the SMMT argument is that they would like to see the preserving of the plug-in car grant and providing consumer exemption from VAT. They say that could increase uptake by almost 2/3 by 2026, so, compared to current projections. So I'm sure, we spoke to Mike on the show, and I'm sure he's lobbying hard on behalf of the OEMs and making that heard in government circles.
Definitely. So we're heading over now to Birmingham Live, which I think this is a debut again for
it is.
For this one.
We like to mix it up and have a few debuts. So you're right. This is the first time. And what appealed to me about this story was so the headline here is drivers to be offered £2,000 for new car as clean air zone charge nears in Birmingham. Now, last week we were talking about the rollout of the first clean air zone in Bath. So it's the first clean air zone outside of London. So we're now going to see more of these cities rolling out over the coming weeks and months of this year. So what the local authority in Birmingham have done, Birmingham City Council, is that they've got together with Motorpoint to offer a scrappage scheme to certain residents and workers who will be affected by the clean air zone. So the criteria is that if you're earning less than £3,000 and you have a non-compliant vehicle, you can put that forward to be scrapped and exchanged for £2,000 off a car from Motorpoint. So this is a good local scheme, and this is kind of what the government is dependent on, local schemes to tackle these local issues.
Yeah, and you just hope that this gets picked up in other areas, don't you? I
Yeah.
mean, it is, as you say, a great local initiative, one between the council and Motorpoint there, but they have thought about it in terms of where that market is, what area of the market that they are going for, and linking it back, like you say, to that scrappage style scheme that we know did work back in the day. It did obviously cost the Treasury a lot of money to do that scheme, to stimulate the market back in the financial crash days, but it worked. It got volume, it got consumers into the showrooms and changing their cars. So, I mean, fantastic initiative, and I suppose there'll be many to see what uptake it gets as to whether it'll be rolled out by other councils in partnership with their local businesses. So it'll be an intriguing one to watch, this one.
Yeah, I think you're right. Birmingham will be very much the test case because of the size of the zone, because it's a major city. Other local authorities will be seeing how it is implemented. And the actual daily charge for non-compliant cars and vans is £8. So, it's a significant figure for a lot of workers within the Birmingham area.
Definitely. So, moving into the world of after sales a little bit, and I know we talked about it a little bit recently around the impact of the MOT extension and what that could mean on the sector, particularly around the new plate months of the market. But AM Online has picked this story up, and car owners continue to delay service and repair work due to coronavirus. And this is some work by the business Bumper, who have been doing some research and analysis on the impact of the coronavirus on the aftermarket through service and repairs.
Yeah, we mentioned Bumper at the beginning of the month. That's they actually rebranded from Auto Service Finance, who might be a more familiar name to listeners. So what they did was they pulled the views of 2,635 car owners in February to see whether decisions on having their vehicles maintained had actually been impacted by the pandemic. And they found that 63% of those respondents had delayed service and repair work because of COVID restrictions, even though 86% admitted to being aware that garages and dealer workshops were permitted to operate. So they could actually have that service and repair work done, but they chose not to. And this is presenting an issue for the sector, isn't it?
It is, yeah. And I mean, there's obviously one around the cash flow, as we've discussed before, and the impact. And there's a lot of reliance on income from that service and repair work at MOTs, isn't there, in the sector?
Yeah.
Right through from your AM100 operators through to those single owner driver operators that's all they do as a business, and we're going into a period where they can start to operate at a more normal level, and they're going to get hit by these challenges, unfortunately.
Yeah, and James Jackson, Bumper's CEO, he says that this does raise safety concerns as service schedules are being stretched and repair work is being put off. And he goes on to say that dealers and garages need to allay customer fears by reassuring them that COVID-19 secure guidelines are in place, with timed appointments, contactless handovers, vehicle sanitisation and social distancing. So, we spoke earlier about showrooms reopening in a couple of weeks' time, but this really does apply to workshops and garages right now.
Yeah, true. And remaining with AM Online and within that aftermarket, and some looking at the MOTs, and there's a headline that number of UK cars missing MOT by more than 3 weeks actually has tripled as a consequence of the lockdown COVID pandemic. And this is analysis coming from QuickFit, interestingly, that have done that work, talking around obviously those drivers that I think they found that 1 in 11 drivers booking their MOT test in the last half only did so 3 or more weeks after their current MOT had actually run out.
Yeah, and that compared to a figure of just 3% in the whole of 2019. So you can understand this. I mean, there is confusion out there. If you have your MOT, you have your regular anniversary, and since last year that anniversary has moved. So this is a case of drivers probably not being aware that they're late for their MOT, but it does present an issue. And we were talking only last week about how the extension last year, which was introduced at the end of March, beginning of April, it was welcome, but it is causing problems now because garages aren't seeing customers coming in over the course of April they won't be seeing them over the course of April coming in for their regular MOT work, and it is moving this work further down the line.
Yeah, and it's. I mean, there's been conversations this week within the SMMT and with Volvo and others around, is the advice that consumers will start to move their MOTs back to the normal date after the extension, so it's a date that they remember, which is one thing. But what was interesting, I know you like this stat, but what I found out this week is that through the pandemic, the reports are that there was an additional 500,000 vehicles put on SON through the pandemic than the usual 3 million that get put into SON on an annual basis. So there's a view that that's actually could be the consumers that know that they're going to be in lockdown for a period of time, or they're not going to need the vehicle because they're on furlough, etc. And rather than having the car insured and MOT and tax sat outside, they put the vehicle into SON, taking it off insurance, no need to MOT it, no need to tax it, and that's risen by 500,000 through 2020. And it'll be interesting to see whether those consumers leave those vehicles in SON and put them into the wholesale market, or whether they take them back off SON, put them back on the road once they get back to some kind of normality of driving.
Yeah, and that is a big figure, isn't it?
Yes, yeah. I mean, as a percentage of the 3 million per year, it's a significant figure of those vehicles going into SON.
Yeah. So you're listening to All the Chatter That Matters on the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Amazon Music, or wherever you find your favourite podcasts. And now we're going to chat with our special guest, Derren Martin, Head of Valuations at CAP HPI. We're delighted to welcome back to the podcast Derren Martin, CAP HPI's Head of Valuations. Welcome back, Derren.
Thank you, Curtis. Good to be back.
Yeah, great to have you back. Now, before we start, I understand you've got a busy month ahead of you in April as you're doing a 50-mile charity run. How are the preparations going?
Thanks, Curtis. Yeah, I'm running 50 miles in the month of April for Prostate Cancer UK, which is a charity close to my heart because I was diagnosed with prostate cancer about 18 months ago, and have had an operation and have had the all clear. So I'm sort of running that distance for as an organised thing by Prostate Cancer UK to raise awareness and some funds for a great charity. So. The preparations are okay. I'm an occasional runner, as I've been told, so it's going to be quite a challenge for me. But I'm really looking forward to it. So I think I'll be up to it. Just hope I don't get injured.
Yes, yeah, no, be careful out there. No, that's really good. And can you just tell listeners how they can help you raise money for that?
Yeah, so there's a Just Giving page, and probably the best way is via LinkedIn. If you look me up on LinkedIn, then it's on there. And so far, I've raised about £1,700 and hoping to raise some more. So I'm really pleased with that, and thanks to everyone who has sponsored me. But hopefully there'll be some more. I don't think I'll get up to the Tom Moore stage, but it'd be nice to get a few more sponsors. But, it is a really good cause, and 1 in 8 men will get prostate cancer in their lifetime. So it is really if it's caught early, then it's very treatable. So that's really the message that I've been putting out there since I was diagnosed.
Yeah, yes. Yeah, definitely. So you're doing about 13 miles a week or something ridiculous. It's
That's the plan. Yeah, something like that. Yeah.
Good luck with that one.
Thank you.
No, great. I mean, you know, it's a great cause, and I think, you know, every penny helps with these kind of things, doesn't it? So, no, on a serious note, good luck with that, and well done for doing it in the first instance, to be fair. So, anybody that's got anything that they can give, then just head over and donate and share, and let's get as much as we can.
Yeah, thank you.
Yeah, no, good luck with that, Derren. Now, Derren, your figures and analysis for March will be available from Monday on the CAP HBI website. But can you just take us through the headline figures for March, which marks the first year-on-year rise, I think, since October?
Yeah, so first month-on-month rise. Yeah, so it's been it's been a good month for values. It's been in two parts really. The start of March, values actually dropped, sort of continuing what we'd seen in February and the previous months really. So yeah, since October, as you say. Since then, we've seen some strength return to the market. So probably during the last two and a half weeks, values have kind of turned the corner and not reducing anymore, certainly at the 3-year age group. But the headline figure is a slight increase of 0.1%. But I think more than ever, the devil is in the detail this month, and there are lots of moving parts within that. So whilst the average is 0.1% up at 3 years 60, at younger ages, 6 months and 1 year, values have actually dropped slightly by around 0.5%. But older ages, anything over 3 years old on average, has increased in price. So it's been quite an interesting dynamic there, really, with younger cars where you'd think there's less of them in the market because a drop in registrations last year, but they have actually declined from a little bit of pre-registration activity, maybe a little bit of late plate appearing in the market, and some of those the retail advertised prices as well.
Yeah, so hi Derren, and welcome back to the show. So, I mean, we've obviously had the showroom shut throughout the first quarter and obviously throughout March. And the March trade prices, as you say, have increased across most of the sectors. But, I mean, what are the standouts? Because I think behind that sort of single headline of the 3 year 60, there's been some significant movements, haven't there?
Yeah, it's been quite clear that what has increased are the aspirational purchases, the toys, if you will, anything that's nice with nice option content and a little bit different but quite niche as well. So the one thing that has really stood out is the convertible market. It's not necessarily unusual for convertibles to go up at this time of year, but they didn't drop too much last year, and some of the increases that we've seen have been stronger than we've seen before. Convertibles have gone up by, on average, about 4% at that 3 year point. But we've seen some big increases on things like the Mercedes E-Class diesel, which is interesting. Current BMW 2 Series, petrol, F-types, and a lot of older convertibles. And it's people really going out and looking to buy something that looks good on their driveway, makes them happy, and convertibles have been the main winner of that. We've seen a little bit similar on sports cars, that type of thing, but it is really the convertible area that has really stood out as increasing. Apart from that, most sectors have been around that sort of average of staying level, although there is one that sort of stands out as weaker, but in general it is those nice to have convertibles that have really stood out.
Now, there were actually some drops as well, notably in the electric and hybrid areas, a trend you've been tracking, I think, since last June. Could you talk us through this and why you think we're seeing continued declines when all the talk at the moment is about electrification?
Yeah, the main areas of drops, as you say, they're those fuel types. MPVs in particular stand out as having dropped, so that sector of the market. But yeah, by fuel type, electric vehicles have dropped by around 1.4%, which is about £400 at 3 years. And when you compare that to petrol and diesel cars, which have barely moved or gone up slightly on average, it is quite stark there. But what you can sort of see is that those cars are still classed as expensive. There's also a little bit of the things haven't gone away, like range anxiety and does that car work for me? Yeah. And also supply levels have increased. There has been some activity towards the end of last year by manufacturers to register electric vehicles to hit their CAFE targets. So there's been some very keen retail advertising, a bit of pre-registration, that type of thing. So electric vehicles do remain expensive, and demand isn't quite matching supply at the moment, which is the dynamic that you see in the used market, which leads to values dropping.
And I noticed in your editorial that some hybrids, especially those favoured by private hire companies, such as the Toyota Prius and Auris, have lost almost a third of their value over the last 12 months. What are your thoughts on that?
Yeah, they do really stand out as having dropped, and we do feel it is. I mean, they did increase due to the private hire market. They were the ideal vehicle, but obviously with the sad sort of demise over the period that we've had of that area, that sector, then if you're an Uber driver or a taxi driver, you're not going to have been going out and replacing your vehicle. So there's been a real drop off in demand for and plenty of volume out there for things like the Auris and the Prius, and they have been dropping quite considerably over that time. So yeah, some quite heavy drops. That has continued again this month, but they're not alone. There are other vehicles that are dropping in value as well, and there's things like the Leaf and the ID3, the Ioniq, the Zoe have all come down as electric vehicles this month, along with those hybrids as well. So it's until those values get closer to the internal combustion engine equivalent vehicles, they will probably continue to drop by slightly more than those other cars.
And I mean, we were talking before the recording, and a lot of questions coming out of the market now since the government's announcement of the adjustment to the government grants for EVs. The obvious questions have been coming out about the value effect on used vehicles. I mean, what's your view on that? Do you think there is an impact, or do you think it's too early to see an impact? And we won't get into the debate of the timing of the grant change and everything around that, but what do you see as the effect on used around that grant change?
It was a bit of a shock that it came out straight when it did, and that it was immediate. I think that's caused the biggest stir, really. I mean, there were always going to be changes to this because the government is not awash with cash at the moment. There are incentives there that they probably need to change as electric vehicles grow. They will be losing revenue from taxation as on internal combustion engine cars decline over the next 9 years. So there did need to be some changes. I think it's the immediacy that's caused the biggest concern. We actually don't think there will be much of an effect on used values. The gap between the new price, even with the grant, and the used price is large enough for it to be unlikely that used values will go up. There is that gap that means that the people aren't necessarily going to pay more for it, and there are other things obviously going on with supply levels quite high and demand not matching it. So we don't think there will be increases. There are also manufacturers who are reducing their new car prices now as well to get down within that grant. So it is quite a complex situation. We haven't seen any impact at the moment, but we really don't think that it will be pushing used car prices up. And really, we do need some sort of incentive for the used car buyer to make them or to encourage them into used electric vehicles. But I think the grant was a shock. That the changes to the grant was a shock, but I don't think it will have too much of an impact on the used market.
Yeah, I think there was a last minute rush, wanted to make sure vehicles were submitted on the grant and things like this. But as you say, I think the focus seems to be now turning towards the government and the industry need to think about the used market and them initiatives to stimulate consumers now thinking about used, because there isn't a new car market if there isn't a used car market for putting them into, is there?
No, exactly. And yeah, that definitely needs thinking about. And I've seen articles written about interest-free loans for the used buyer and things like that. But even that is quite a complex situation. You can't just offer interest-free loans to anybody wanting to buy a vehicle. And that has an impact on captive finance for manufacturers and things like that as well. So yeah, it does need a bit of thinking. But yeah, in a way, the reduction of the grant strange timing, but I think, as I say, it was coming.
Yeah, no, I agree. And turning now to sort of the retail market and thinking about what did you see in terms of retail activity for the month? And we noticed that you reported some of the businesses are reopening at 90% of normal, supermarkets between 50-60%, and some premium brands were ahead of where they were expected to be. What are your thoughts on happening around retail at the minute?
Yeah, I think it's been quite mixed with where business levels are. I think the key pattern is that everyone has improved throughout the month of March. So even if your business levels were at sort of 50, they've slightly improved. I've been quite surprised that there's been some more premium franchise dealers that have been at that sort of 100% level, and yeah, as you say, maybe even higher. I mean, it's a real testament to the industry that they've got themselves digitally able to do this. I think they've had to work hard for it. There's been a lot of prospecting going on, but in general, yeah, an improving situation, but quite kind of a little bit two-tiered. I think the car supermarkets are not doing as well as they would like, and are desperate to reopen. They're the sort of places that you go and browse around, and you come away with something that you didn't necessarily want to or not something that you didn't necessarily go there for, but you've seen it and it's good value and it does the job for you. And I think that's partly what's happened with MPVs dropping in value, that they tend to be the sort of supermarket's domain to a certain extent. And you go into a supermarket and you come out with a Seat Alhambra because it looks really good value and you know it will do the job for you, but you don't necessarily search for that type of vehicle online. So yeah, it's been interesting, and again, we've seen the premium market, those toys, those aspirational purchases. They've been the ones that are probably closer to normal than the car supermarket area of the business. But that will obviously change from April the 12th.
And Derren, taking Q1 as a whole, what's your view on how used prices performed, how used values performed, and what can we expect to see in Q2?
Yeah, Q1 has performed how we expected it to. As soon as we realised we were going into a lockdown, really, values dropped, business levels were lower. Obviously, a lot of people were on furlough, buyers on furlough, and they weren't really replenishing their stocks. If a car sold, they weren't necessarily going to replace it. There was certainly very little buying for stock. So we expected values to decline but not drop off a cliff, and that's what happened during January and February. And then we did expect it to pick up in the run-up to car showrooms reopening. And so as soon as that was announced, we thought that would turn values around, and that's what's happened. Yeah, we think that values will stay strong for the remainder of the period up until car showrooms reopening, and then they may strengthen further. I actually think there will be a period of strength in April and May. There's not loads of supply coming through. Obviously, new car supply has been affected by the pandemic, also affected by the semiconductor issue. So there's going to be less new cars registered in March, certainly. That will pick up in April and May, but that will obviously also lead to less part exchanges in the market, so less volume and high demand. But to caveat that, the demand will not be as strong as it was last June when it really, really escalated. But there has been people buying, obviously, and we've talked about the 65% of normal, the 50% of normal during April and May last year. It was 5% of normal, and it sort of got up to 20% of normal at its best towards the end of May. So there were a lot less people buying cars during that first lockdown than there have been during this third lockdown.
And just thinking about that, I mean, we mentioned about the recovery, and you're talking about obviously the vehicle restocking of product, and that's driving some of the demand and the shortage of stock. Do you think that we might, because a lot of the movement at the minute is, as you said earlier, that desirable product and some of the weakness in MPV, is that what the market should be looking out for now? Maybe the realignment of the sectors rather than the overall movement, because there has been this unseasonal sector movements, hasn't there, as you described earlier. What's your thoughts on that?
Yeah, I think you can throw seasonality out of the window
Yeah, it's
now.
gone out, yeah.
For the time being, yeah, usually April and Easter are a watershed where values start to drop after that. But I think you can abandon those thoughts this time around. I think as one of my colleagues at Kappa always says, if it was a good car before all this, it's still a good car now. So stock up on those sorts of vehicles, and MPVs, they could actually strengthen. They're good value to a certain degree now. Still not particularly fashionable versus an SUV, but they'll do a good job for you. And if you're looking at a staycation and you're starting to travel around a little bit more, then maybe there's some opportunities there to get some cars that have dropped in value over the last few months, and they could be desirable if you can switch consumers into them. So the devil is always in the detail. It will depend on certain brands, the volumes that they have. Some will be more affected by the semiconductor issue than others, and that could be model specific as well. I think there's plenty of new car stock out there to cater for the next few months, but it's not coming through that quickly. So as I say, the devil is definitely in the detail, and you need to look at the individual models and things like that. And we talk about sectors, but there will always be something that outperforms other peer vehicles in that sector because of supply and demand. And again, with SUVs have dropped slightly this month, but larger SUVs have actually performed quite well. And older large SUVs, things like Jeep has been strong, older BMWs, Land Rover products, that's performed well. So I personally think those aspirational purchase, maybe on older cars, people looking at a car that they thought, well, I'm never going to have one of those, but I've saved some money. I'm not going on holiday, and I've got a grant through, and I'm a little bit better off than I was. Those, I think they call it sort of accidental savers. They're looking at that maybe brands that they couldn't before, and I think there will be some continued strength in that sort of premium older cars, maybe sort of 5 years old, that you sort of really pleased to own, rather than just replacing something a little bit more run of the mill.
Well, Derren, many thanks for coming onto the podcast and sharing your views there. Then there's plenty of optimism there for dealers as they move to reopen over the next week and the next fortnight across the UK. So many thanks for the rundown there, and do come back next month to let us know how March went. And until then, all the best with the run. We both wish you well with that, and tell us how that goes.
Thanks to you both for promoting that, and it'll be interesting to come back next month, because I guess we will talk at the end of April, and we'll have had a couple of weeks of showrooms being open, so it'll be interesting to see what's happened to values in that time.
Yeah, you can share how March finished, and share how your legs are holding up for the 50-mile run as well, Kate. At the same time, you might be talking to us from your bed as you're resting at that point. Hopefully not.
Maybe I'll do it for my run.
You could do. Yeah, there is that. Yeah, your last mile of the 50 miles. We'll tune in for that one. But best of luck, and thanks again. I mean, it's key at the minute to keep an eye on what's happening in the sector. It's as you say, seasonality is gone and normality is gone, hasn't it? So thanks a lot, and again, good luck with the run, and fantastic work for Prostate Cancer UK. So anybody listening, head over to Derren's website, and that's where you'll find the links to the Just Giving page as well.
Thank you.
Thanks, Derren. Again,
great interview there with Derren, and we wish him all the luck with the run, the 50-mile run, you idiot. No, fantastic. I mean, it's fantastic cause. I mean, he's raised a significant amount of money already, as he was saying there at the start of the interview. So every penny counts. Please head over to Prostate Cancer UK or find Derren on his LinkedIn profile and get donating, and wish him luck. I mean, 13 miles a week is some feat. For him to run, but let's hope, like I say, we may be interviewing him next time from his bed or his couch as he's resting up after his 50-mile run.
Yeah, no, we definitely wish him well. And before we interviewed him, I asked him how the training was going, and he said, well, I'm only doing about 6 or 7 miles at the moment, which I run as well, but I'm not running 6 or 7 miles. So I think he's off to a really good start.
He is. So best of luck with that one, Derren. So going back to AM Online, and we mentioned obviously Mark Lavery a couple of times on the podcast recently, and he's been on the podcast himself. And the story in AM Online is Cambria Automobiles CEO leads MBO bid for AM100 Car Retail PLC, and this is Mark Lavery and his team looking to take the business back off the stock exchange. I mean, I think they are significant shareholders themselves in the business, but he obviously looking at removing the Cambria business off the stock market and taking it back into management ownership through him and his team.
Yeah, now this is all based on a statement that was issued via the London Stock Exchange last week, and it revealed that the board has consented to explore the possibility of the three of them acquiring the entire share issue at a price of 80 pence per share. And the piece goes on to say that Mark Lavery is the largest shareholder with a 40% stake. And of course, it was Mark that launched the group. And this is an interesting development. And when we were talking to Steve Young, we at ICDP, we asked him about this, and he had some interesting views on the subject and didn't seem terribly surprised. And he thinks it's a canny move by Mark and the team there. So do head over to the interview to find out more about what he said. But this is an interesting development, isn't it?
Yes, definitely. I think I can see where Mark's coming from, and I know Mark very well and his team there, and you can see where they want to take control. Maybe it's the fact that they don't believe that it's being valued correctly. They believe the business is worth more in terms of, the investments, etc. And it'd be great to have Mark back onto the podcast because, one thing Mark was clear about on the interview when we had him on was, some of these businesses that they operate within, especially that super luxury end of the sector, they take many years, don't they, in terms of their investment return. These are 10, 15, 20-year investments before you start seeing a return when you start talking about the Bentley and Ferrari market and that sort of territory. So, maybe he just didn't believe that the stock market is reflecting that in the valuation of the business. But great team, great management team and great leadership, these guys. So best of luck with that.
Yeah, and let's not forget that it was a brave move to go into that upper end of the market, because at the time Cambria was best known for the mainstream, the volume brands, representation with Ford amongst others. So that was a move that was brave at the time, and it has paid off. And clearly Mark and the team would like to see it pay off even more. So interesting one, this, and we'll keep tabs on this story.
Definitely. So heading over to a couple of stories from Pendragon, actually, and the first one is within Motor Trader, and this is talking about their financial announcement and talking about that the strong H2 and cost-cutting drive Pendragon did led to an 8.2 million profit result. So again, they're talking obviously about the profit before tax of 8.2 million compared to an underlying loss before tax of 16.4 million, which they announced in 2019. And they're talking about obviously that cost cutting and drive through the second half of last year that supported that result.
Yeah, and this is welcome news for Pendragon because they have undergone a number of setbacks. They've restructured, and I guess as far as Bill Berman, chief exec there, is concerned, this must be a case of light at the end of the tunnel, because this is signs of a more positive turnaround. And he does have some interesting points to make there. He says at this point we remain cautious about the shorter term economic outlook as the government support is gradually withdrawn, and the board notes the potential for short term constraints in new vehicle supply. Now, we also found a story on Automotive News Europe where Bill actually goes into a bit more detail about his concerns about these supply constraints. And he goes on to say that there is going to be some turmoil in the business over the next 16 to 18 months. So it's interesting that he's put a timeline on that. And he says that's all down to the supply of new and used vehicles.
Yeah, it's as you say. I think the bit that we're now starting to see as we come out of the pandemic and showrooms start to reopen, that some of the impact isn't necessarily about demand. Some of this impact is about supply, and we are constantly seeing the sort of little headlines come out around the impact of the semiconductor on the market. There's been changes across a lot of the OEMs as well. We've seen what Stellantis are doing and others, and I've got a quick story that's just landed on my inbox just before we head on to the final one there. But they, again, trying to warn that, and I know Europe, there's been letters between ACEA and the European Commission warning of the challenges of supply, and that it could actually impact the whole of 2021. It might actually be 2022, or at least the fourth quarter of the year, before supply gets to some kind of normality. And we have seen other stories like GM over in the US have been supplying vehicles without certain modules on because they haven't got the semiconductor that operates the fuel economy on some of the GM trucks, but they continue to supply those vehicles in the meantime. So it is having a hit on a lot of the sector at the minute that isn't necessarily being seen quite as much because of the pandemic.
Yeah, and I'm intrigued. You've got some breaking news.
We have, yeah, and it's kind of segues slightly, but not quite. But there's been news come in that Honda's Swindon plant has actually been sold to a property developer. Oh, so there's the potential that the property developer has given a potential lifeline to the 4,500 workers and the area's economy. Because these guys are one of Europe's largest logistics property developers, and they've pledged to invest 700 million in the site and create thousands of new opportunities for the site. And this is looking at that site down in Swindon there, which is a 370-acre site. And they don't go into much detail in terms of what they were doing. Obviously, the MP down in Swindon has said that there was a much clearer plan for the future of the site because of the sale, and that development plans to transform it for a mixed industrial and logistic use. So you never know, it could be logistics within the automotive sector, outside the automotive sector, but at least there's a lifeline there for the 4,500 staff involved with the Swindon Honda plant, and the fresh investment as well.
Yeah, which is really good news. And you heard it first here on Motor Trade Radio.
Definitely did. So we've got an and finally, which actually made us both feel pretty old.
Yeah, definitely. So the stories from Autocar, it did actually receive quite a bit of attention towards the end of the week, and the headline is Ford Mondeo to be discontinued in March 2022 after 29 years. And it's the 29 years that is kind of resonating with certainly me, and I suspect you as well, Phil, because I was recalling that when I first came into automotive journalism, it was as the Mondeo was being launched. So at the time I started editing a magazine called Company Car, and the first issue that I edited had the new look Mondeo on the front cover, and it was a revolutionary car at the time. Let's not forget that it was the Sierra replacement, but it was also Ford looking globally, which is something they'd tried to do before but without any success. And this was their first world car, so it was sold in the key European, Asian and American markets, and it was the first time that Ford did that with any success.
Yeah, and it's like you say, it's a shame because it is an icon of the market. They did really well in the fleet market, didn't they? I mean, they got quite big towards the end, didn't they? I mean, I don't know if you've seen the latest models compared to. I mean, I suppose that's all the cars, isn't it? We don't, but
well, it's in its fifth generation,
it is,
and I had the most recent one on test, and it's a big car.
It's a big car, really is. Yeah. I mean, we've seen a Fiesta evolve over time in terms of its size, as all cars have. I mean, you look outside the window and see a mini Metro parked in a car park, and it's quite laughable, isn't it, compared to what we're parking in car parking spaces. But I think when you get behind the wheel of the latest Mondeo, you realise it's quite a big car now. It is, especially if you get the estate version as well. It's a significant car that many people might actually struggle parking these days. But again, an icon that is leaving the sector, unfortunately. But you can see why. You can understand some of the realignment proposition that's coming out of Ford in terms of their brand and model representation, and as the market is starting to shift. And we were talking obviously right at the start of the show around the EV and things like this, and you've had Derren on partway through today's podcast talking about the sector strengths and weaknesses, and it's putting challenge against that sector of the market, particularly on something like the Mondeo.
Yeah, and it was physically a big car, but within fleet, it was absolutely massive. It was a good seller. In its best year, it was selling over 86,000 units, but in 2020, it sold just 2,500, and 39% of Ford sales are now with SUVs and crossovers, which is really where the Mondeo buyers have migrated to.
Yeah, it's a shame, but I mean, some cracking headlines this week, and a brilliant interview there with Derren Martin, and as you said right at the show there, Curtis, the interview with Steve Young, very insightful, and he's got a lot to say as Steve on lots of areas of the market. So if you haven't listened to that, then do head over to wherever you listen to your podcast and have a listen to the Steve Young interview, and hopefully we will get him back on in the future. So great interviews this week.
So that's all for this week. Thanks for joining us for all the chatter that matters. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Stay safe and stay well. Philip and I are back next weekend for the That's all for this week. Thanks for joining us for all the chatter that matters. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Stay safe and well. Philip and I are back again next weekend for the week's headlines. Until then, it's goodbye from me.
And it's goodbye from him.